Thank you everyone for coming today. Very excited to discuss stablechain ecosystems and the growing world of on-chain foreign exchange. If we could start by a quick 1-minute introduction, kind of going down the line from closest to farthest around what you guys are doing at your current company, your history, and your company as well. That'd be great.
Yeah, good afternoon, everyone. My name is Alex. I'm a co-founder at Key. We're an Onchain FX layer, mainly focused on emerging markets. We run KeyX, which is a hybrid centralized, decentralized exchange. We work with non-dollar stablecoins, mainly in Latin America, but expanding to other regions in order to create 24/7 FX markets and change the way money is moved primarily in the remittance type of OTC trading and import-export category. So that's what we do.
Hi, my name is Rafael. I'm CEO of Twin. We do issue local stablecoins in Latin America. We do also integrations with local on and off ramps from fiat to crypto. And also we do carry trade protocols to be the infrastructure for any wallet or exchange that wants to soft land in Latin America and make it in a compliant way.
Hi everyone, my name is Johannes. I am the managing director of the Frankencoin Association. Frankencoin is the largest Swiss franc stablecoin, fully decentralized. And basically we're here bringing the Swiss franc to the world because we believe it's a superior store of value against the dollar. And actually I have a little gift for someone of you. It's in my bag and the RD advisor is going to bring it to me afterwards. But stay tuned, a bit of insider knowledge about the Swiss franc.
I'm Martin. I'm working with co-finance. I'm doing BD there, but I also have a technical background and I'm sitting here to represent the infrastructure side. Curve is one of the biggest stablecoin decks and now we have a new swap with FX swap, which is very suitable for non-US stablecoin. And we're going to explore this.
Great, thank you guys very much. My name is Jacob, I work at Gauntlet. We curate over $2 billion in TVO for many of the institutional clients in the stablecoin space and across DeFi. We work very closely with a lot of stablecoin partners with go-to-market and institutionally incentivizing users to adopt stablecoins more. So really excited to chat with you guys today. So at Gauntlet, we often see, stablecoin issuers and operations and infrastructure players within the stablecoin space strive to not only grow, their individual product, but grow the stablecoin ecosystem. How do we grow the pie and not just reshuffle people from one stablecoin to the next, but make the entire economy grow? I'm really curious, given that we have kind of two different socioeconomic backgrounds here from Rafa and Johan, if you guys could talk about kind of what were some of the top challenges that you guys are working through, either specifically to your regions or in the general stablecoin space as you try to bring in new users into your local region.
Sure. I believe the Swiss franc is maybe a bit of a special case here, right? And if I think about stablecoins, I always think about two different use cases. One of them being transactions, transactional spending money, paying in stores, doing cross-border payments. And for that, I believe it's easier to think in one currency. Right now, the whole world is basically in dollar. The stablecoin world is the USD denominated, right? You have, I think, 99.8% of the volumes are dollar denominated. And that's all right for transactions. And at the same time, I'm Swiss, I'm from Switzerland. We have a very good financial infrastructure. Everyone has a bank account. You don't pay fees to pay. And so it's very hard I believe there's always a very limited need also on the payments and transactional side for that because it's very well covered. However, the second part, and that's maybe might differentiate kind of what we do a bit, to everyone else here, is store of value, right? Where a stable coin is also used very often to hedge against local inflation, to hedge against the local banking system. You've seen it in Lebanon, for example, where you had dollars on your bank account, and I think even in Argentina, right? 2002, even if you had dollars, the dollars were just worthless because you couldn't get them out of the bank. So that's a huge secondary use case of stablecoins. And that's where the Swiss franc is kind of vastly superior. So if I think about growth, I don't necessarily only think about the domestic market, which is interesting because people are used to it, but about the role the Swiss franc plays in traditional finance, which is really, really big already, mainly with institutional players, because it's not that easy to actually access the Swiss franc. And we're bringing this same value on chain. But it also brings the challenges, right? It's this, I'm kind of here traveling the world and telling everyone about this weird little nation in essentially Europe and why you should actually hold their currency. And that is, it's just a lot of work, but a lot of fun work. On the other side, there is, you ask about challenges. And economically speaking, doing a stablecoin in Switzerland is not as easy because we have negative interest rates. So the traditional model with issuing a coin and then basically pocketing the risk-free interest rate just doesn't work. And this in combination with the very strict regulatory environment you have in Switzerland, basically make it impossible, as of now, to do centralized ones. And that kind of creates that perfect environment for decentralized stablecoins, because it's the only way you can really do it. Tapping into risk premiums you find in DeFi, but also not having kind of some of the regulatory challenges you might have with a centralized setup.
Yeah, very interesting. And Rafa, I understand you come from, more of an emerging markets side of the coin. How is that different for you? I'm sure the parameters are very similar, but the use cases and user stories are much different.
Yeah, the use cases are, could be analog or similar. You have the transactional side and the investment side. In Latin America, for example, I would say more than 80% of the countries, they think on their own currency. So they save on that currency. And products to keep those populations yield are not widespread. So there's an opportunity there. Also, transactional costs are high here. There's not an homogeneous infrastructure. So that's an opportunity to do. I would say the challenge is, obviously, this is an heterogeneous landscape, so regulatory clarity is needed. It's also heterogeneous. And I would say the challenge is more on the side of distribution than on product, definitely.
Awesome. Well, it's a great segue into talking with Martin and Alex. I'm sure you guys have to make your own kind of due diligence and make your own business decisions around which stablecoin markets you do onboard and support, given that you guys are more of the operations and rails of payments and stablecoin economy in DeFi, bridging, the users that Johan and Rafa are dealing with on a day-to-day basis. Can you guys talk about what the critical components are of, listing a new stablecoin asset, supporting a new market on something like Curve might be, and then we can move over to Alex?
Sure. I mean, technically listing a type of asset is pretty easy, but, like you said, it's less of a product and more of a distribution. And so when we look at just like where FX markets are, they're highly competitive, especially in Latin America. I think spreads are tightening, every week. And it's really about how we can get the pre-existing, user base, because these FX markets have really been running for years, right? Like this whole, it's about 7 trillion daily volume in the FX sector. And, if we want to go tackle and really steal the flows of the main user bases, like these remittance companies, these import-export companies, these banking institutions, we need to build products that ultimately are better than what's being done right now. And the good news is what's happening on the back end is way better. We're getting better on pricing. We just need to, I think, there's probably about a 30% left to be done on both the pricing end and on the product end. And I still think there's lots of users who are having trouble linking wallets, right? These are more like, standard style remittance companies or OTC market makers, these local arbitrage market makers, we have a hard time enough bringing them onto our application and trading that way. They still like to trade over OTC chats. And I think like the amount of money that's moved in the world on WhatsApp is astonishing, right? And like at the end of the day, the tech is better. What's happening on the back end is better, but we're still competing against the local, person who's sending a remittance to somewhere in Buenos Aires, and they walk into that local Western Union because they're friends with the person there and they've been sending money for the past 10 years and they know it's going to arrive. So there's still different trust components and product components that we really need to tackle. But I think the migration has already started, and our thesis is that, over the next 5 to 10 years, these markets will essentially come on chain.
Yeah, I could just play the role of the infrastructure provider here, because we are not choosing assets. Basically, we are chosen by asset issuer as the best venue for liquidity. And Curve did find product market fit mainly in the stablecoin area, US dollar stablecoins, and we are still working on making them better for FX. We call it FX up, so a new version basically, which should be very suitable for low volatile pair. There's some volatility, or I say currency who are like non-US dollar currency who are quite volatile, but not as volatile as crypto, basically. So we try to find a good solution for this. We did still see until now some kind of hyper-dollarization, but I think the point is going to change. There's more and more local currency issued, and all of them, or some of them, need liquidity on chain, and so we try to build in this direction because there's a lot of volume and AMMs run on volume and trading. So if we can bring like 10%, whatever, 5% to on-chain, this is real. Yeah, it's real flow. It's a lot of flow, basically. So, yeah.
Yeah, very interesting. I know that Curve is an industry leader in, stablecoin swaps. So I'm very keen to see how, as more stablecoins come online and there's more effects through Curve, there might be more features to support that sort of onboarding. Now moving on to kind of specifically on-chain FX and emerging markets. As you guys already started to mention, like here in Argentina, there's of course lots of blockers to maintaining the right amount of wealth. Inflation is very high or fluctuating very heavily. We see a lot of locals, including like my family who lives here, constantly having to think about their relationship to the local dollar versus, for example, the US currency. Alex, I'm going to go back to you. You started to mention things like remittances. I'm really curious, given your experience, where are you seeing some of like the most product market fit, and how are you guys kind of trying to fuel those drivers for growth?
Yeah, the on-chain FX swap is becoming very popular, and I think it's happening on-chain with these local non-dollar stablecoins. And I think the argument for non-dollar stablecoins gets oversimplified oftentimes because people just look at like the store of value. They're not really focused on the transactional piece. But what it allows essentially us and others to do is to tokenize the payment float of these flows, so users can get these funds instantly. Which, if you look at Argentina, and for those of you who are familiar with like the blue chip swap and getting money out of the country for so many years, it was such a hassle. In Colombia, it's really tough to get money into the country. In Peru, it's really hard to get money out. So these markets are making that process instant, but sometimes there is a premium to operate that. And it depends on who's the client and who's the user. But I think the last phase now, because we've already solved for the mechanics and the value prop of the speed and the settlement, it's just the last phase is dialing the pricing in and then getting in really the users who are driving the majority of the volume. And the good news is we're already starting to see some of these remittance companies, these more kind of traditional banks who are either moving money through the US via ACH, kind of coming on chain. And there's a lot of these big players now who are doing this through stablecoins. But I think we're still right at the finish line for seeing more massive adoption.
Awesome, thanks. I'm going to go over to Johan. Given that you guys are pegging to a stronger stablecoin and more developed, the Swiss franc, can you guys talk about what sort of globalization or kind of you're seeing more interest or more traction with kind of your globalization efforts relating to your currency?
I mean, I would say that the biggest use case right now for Frankencoin is actually we launched a month ago about a cooperation with Gnosis, where Gnosis Pay is having tremendous growth in Latin America. I think they're pretty strong in Brazil. Obviously, they're coming from Europe originally. And what we enabled is kind of the native integration into that, where you hold your Swiss francs on your non-custodial account on Seal, you earn a yield on it, and then you spend in your local currency with Gnosis Pay. And that had a tremendous impact on our side, which is basically the volumes spiked and they're super high, which is like money pouring basically into Gnosis Pay for that specific use case. It's still early, so it's very hard to tell. I don't really have kind of, as I said, it's been launched 2 months ago. I think Martin is actually one of the users.
I'm a user.
What's your experience so far?
It's nice. Yeah, it works very well, basically.
So it's still very early, but like we just see that uptick, and I believe that is going to continue. And I mean, this is just put in context with what I've seen in the last couple of days here as well. In Chile last week with a little treat, and now in Buenos Aires, where just there's this kind of this product market fit, you could almost say, for stablecoins in general. But now there's so many projects like Seal, like what Aave announced yesterday with the Aave app, right? That are building for the users and also for the kind of the less technical users to actually reap the benefits of what stablecoins bring. So I'm very bullish on stablecoins, even though the crypto market right now is not the best shape, I would argue, but there's just so much tremendous growth, and I'm curious to see. Can't really say much more right now about that. I'm not sure how you observe that from a more Latin American perspective, guys.
Yeah. So USD stablecoin adoption is everywhere. It is missing the local side of that, right? And at least that's what I see.
But then the question becomes like, what's the use of that? Is it transactional or is it as a store of value? Right?
It is both. If you see, like, for example, if you normalize to FX rates, real rates in Latin America are, very attractive. So strategies like covered carry trades are, a no-brainer. That's on the investment side. On the transactional side, the fees that the merchants pay are tough.
So why are not more people picking up on that? If basically, you have very low fees.
They are. You're starting to get traction on USD stablecoin payment, as you might see around the DevConnect. But it's still missing the local adoption. I don't think there's enough lending effect up to the moment for local stablecoins. But we're gonna get there eventually.
Yeah, I'd like to, if I may too, like there's, 99.9% of the money moved in these local markets are still in the local currency. And so even though, holding these local currencies or these local stablecoins will never be what it is to hold USDT or, a Swiss stablecoin or a European stablecoin, 99% of the economy is still based in these local fiat. Right? And 99% of the population still holds 99% of their wealth in this local money. And the digital version of that is still better. Right? And so like my thesis is that we're not expecting the same user adoption as like holding these like USDT or USDC or others that we've seen in the past, but it's still going to happen. And that we don't have in Colombia, for instance, we have things like PSC, and they just launched this new API system called Breve, which works. But a lot of these like very kind of outdated systems still exist. It's very, very slow to move money. There's local taxes to do so. It's really hard opening up bank accounts. We've seen tons of verticalization across like the traditional financial sector. So big banks are buying fintech apps, and now those fintech apps are charging for their services. So we expect to see a lot of the local clearance, the bulk transfer clearance settlement systems come on chain. We think institutions are going to be the biggest adopters at first. We're already seeing it, and that's kind of like our general thesis on these local stablecoins. But yeah, I think like the big picture is that at first they're going to be predominantly transactional based, and then we're going to really see TVL start to grow.
Yeah, it's probably both, right? The history of Latin America is, you have capital controls everywhere all the time, unexpectedly. So, that goes hand in hand with hedging and effects and so on. So, definitely, there's a de-risk laddering path that we have to walk from the most risk tolerant actors up to the more regulated and so on. But it's gonna get there eventually.
And this is another good segue is in terms of when we're thinking about kind of the contention that there always is between product and growth, right? You guys are all kind of striving to increase the activity of stables and their ecosystems both globally and locally. And the product team is always trying to figure out, right, what's the right feature for us to unlock that next channel of growth. And, for example, Curve has the UX of Curve, the experience of Curve has really withheld multiple different ebbs and flows of DeFi. I'm curious, maybe starting with Martin and then going down the line, have there been any surprises in terms of what product features or what elements of your protocol have really found a home with stablecoin exchanges and on-chain FX with the global economy getting a little bit bigger?
I'm not clear if I get the question, but you mean the UX?
Yeah, whether it's the UX or features within the Curve platform, are there any things that have really you've seen a lot of increases in uptick of usage?
Yeah, I think of course, stablecoin is still the major usage on our platform basically, and that's our bread and butter basically. But what we see is that now as we have a better version for unstable pairs, we hope that we get more traction on unstable pairs. We have unstable pairs, but basically the technology we use, it's the same on Curve, it's the same as YB, the new project of our founder uses, basically. So it's he uses crypto swap or FX swap pools, and hopefully we can penetrate more of the market, of the non-stablecoin market, basically. Because I had a talk earlier. We still on the camp. You should not you as a liquidity provider. You should not have to make your own market. Basically, you have to have unified your liquidity. And I think that's the better vision in this, because this is just less friction basically. And we're still in this camp and we're executing on this one basically. And
absolutely.
Stablecoin, we talk to a lot of stablecoin issuers currently because we want to do pilots with our new technology and see how it performs. And somehow it's just a different crowd. You know what I see, because we are crypto native on-chain. And now if we start talking to stablecoin issuers, it's they're somehow slow, I would say. For me, it's a little bit...
We're not slow.
Yeah, you are not, but okay. He's very fast, agree. But they're also slow because regulation is regulatory issues, and there are other players now entering this on-chain world, and so they need to learn things. And
I mean, Martin's comment is a very important one for us, right? It's one of the biggest challenges we have is, and this is not really been that common because it's just everything is USD denominated, so you don't have that problem. But if you once you start having stuff like Swiss franc dollars, then slippage and spreads become a massive issue, because if Bitcoin dollar, you don't care if there's a 1% slippage. If you have Swiss francs dollars with 3% yield per year, you mind a lot, and that's why we're super keen. And we've launched a small pilot not long ago.
Yeah, we have a pool on
a week
mainnet.
Ago, a week ago, right? And hoping to scale it and actually solve one of our big problems we have with the new FX swap, and just kind of what did your engineer say? 100x improvement in liquidity with the same LP pool, something like that. Theoretically, 100x.
No. It's 10x. That's good enough for me.
It's good enough. Yeah, it's still a massive improvement, right?
Yeah. But I think the biggest surprise, what I see regulatory, what's interesting, what I did discover in talking to stablecoin issuers is basically in Europe, you're not allowed, so a European bank is not allowed to having a stablecoin who is not MiCA compliant on the balance sheet. So what they do, they use AMM as a legal arbitrage, basically. So they set up special purpose vehicles who hold liquidity in the AMM itself, and then they feed the liquidity in the pool. They can basically trade over this pool, and then they can basically, they don't have to hold the token on the balance sheet. And this is one of the, if you're coming from the technical background, we think, okay, Yeah, but you want to have like basically people using a product not as like arbitrage. So the legal benefit of it is higher than the swap basically. But I think at the end it doesn't matter. It's just having people using on-chain infrastructure is good for everyone, and seeing these products evolve, it helps like wherever is doing it basically.
I can say working alongside Curve for a long time and also working with DeFi partners, institutions, it's a very different onboarding cycle, as you guys have mentioned. So yeah, lots of different barriers to entry and blockers. If we can just move down the line to Rafa and Alex, yeah, can you guys share any sort of product features or designs or things that are really exciting to you guys about the current space that have been leading to more growth in your ecosystem?
I mean, two things we're working on is like, we launched, mobile apps where essentially we've embedded like non-custodial wallets and account abstraction. So users who are just normally used to, opening fintech apps here in LATAM are now doing that, but just on the back end, it's stable coins and non-dollar stable coins. And they really don't know that that's what's powering this FX swap and this like pay-ins and payout infrastructure. So we're really excited about that. And then we're also, launching probably early next year, more of open on-chain type of trading environment where we're essentially, this rebalancing mechanism, which is centralized, we're doing, but we're essentially market making in a way like our own DEX. So our users don't have to take any type of central counterparty risk. We, assume all of that FX risk and that upkeep, but we just do it internally. And so, and it essentially just allows users to link their wallets and trade as if they were trading on any type of DEX. So, two, I think when we think about these type of products, we really think about who's, using FX markets, who's using non-dollar stablecoins at scale, and let's go get those guys. Because if we can do that, then we're going to build a pretty sweet company and a pretty, help contribute to a much bigger sector.
Yeah, in our case, on the product side of things, working also in building FX markets, there's a need for a variety of participants there, not only retail, but also businesses and obviously OTC desks and so on. So current FX markets are liquid, but are, few players really move them. So we need to get them on chain, just atomize a little bit more the demand. That's one thing. The other one is on the transaction side, there's a lot to be done in terms of privacy of transactions. If we want to get institutional adoption and volume, we need to tackle that definitely. But also, again, working on the distribution side, because there's, the distribution has to be product led. In case of Latin America, transaction costs and FX volatility and so on, that's a feature for stablecoin adoption and for FX adoption too, right? AMMs and so on.
Yeah, so what I'm hearing is there's different aspects of the user experience and the product suite that really allow users to onboard quickly and use their stablecoins for the first time or for the 100th time with a lot more ease and accessibility, which is great to see in the different regions of the world. It's very different. I'm curious, when you think about like the DeFi landscape now and an on-chain ecosystem, if you could kind of wave a magic wand and fix one major problem, what would that be for your individual kind of suites of issues?
I mean, the tools are there. I don't think there's, we just have to compose them correctly and distribute them correctly and let the user see the user value, actually. I don't think there's much of a challenge there. Again, the thing that is, it's a tough trade-off is the institutional adoption, right? We all love the DeFi ecosystem and so on, but this is getting more and more regulated. Privacy is an issue there, so that's the issue, right? How do we preserve privacy but scale crypto adoption?
Is there anything else that these institutions are waiting to see? Some things that we've heard are just time, right? Consistency.
Well, obviously they want regulatory clarity, but in a default way, they want to see everything. That's a problem, actually.
I guess what I want to see is basically an international regulation of stablecoins, basically. I think this would help. Of course, it's a huge task and maybe can be done very, very wrong, basically. And I guess, it won't happen, but it would help like everyone, I guess, somehow. And but I don't think, and this is more like the outlook is said somehow, I think there maybe is also a time where you have some regulatory backlash because if people have access to US dollar and then the local economy starts to be local, so it's a tough thing to do, basically. But I guess it would leapfrog our space. But it's a wish.
Yeah, I agree. I mean, this goes back to TradFi, right? It's the fact that every nation does its own version of a regulation and has different standards. Just one example. KYC standards. Switzerland has different KYC standards than the European Union, which messes up UX. Because you have to do two different KYCs, for using it in Switzerland and in the EU, and just adds so much friction to the system. It's just this like the harmonization, but that only works if you have like a lighter type of regulation, which allows different things. I mean, you see it very nicely with MiCA right now in the US regulation, which are literally kind of they're contradicting themselves. So now decentralized projects are forced to issue two stable coins for two markets, which has zero advantages, just because those two regulations contradict themselves, and everyone thinks like they have the better one. This is it's unfortunately it's a bit wishful thinking, I would argue.
And it's now your wish.
Huh?
This has been my wish. So
I know, but I'm just basically going into the same thing because this is a very current discussion we're seeing in Switzerland right now. Right, Switzerland has no regulation for stablecoins at the moment, but basically this allows, like, it completely blocks centralized stablecoins. Now the discussions are starting on how we could do that, but it's one more of the same thing, that the Swiss regulation will then not be kind of compatible with the European regulation and not be compatible with the American regulation. So wow, now we have to do 3 stablecoins. Cool. Very good. Good job. So that probably would also be one of my things. But then also the understanding in institutional. I had this quite nasty conversation a couple of weeks ago on a panel in Liechtenstein, where there is this notion of certain banks, or not banks, regulated players. They go, it's good because it's regulated, and it's regulated. But there's like not the why, but it's just this direct connection. We try to make this case of we need to be compliant. It's super important, but compliance does not equal regulation. So you can also be very compliant with any laws and legal frameworks without having a stamp which oftentimes actually gives you more disadvantages than advantages, because you have to deal with systems which are old, which are outdated, which are slow, and I always make this point, like, do you want to bend backwards twice to squeeze yourself into an old, existing, inefficient, and bad system? Or do you want to build good systems and say, okay, let's make the system so good that the old players coming from the old systems are actually saying, hey, it's actually beneficial for us not to force those new players to bend backwards and try to squeeze in our existing ones, but we actually open up and work with them. That's maybe an ask for the banks out here, right? Learn about the space. There's very, very few regulated banks here, actually, in Argentina, which is a shame. I had a conversation with a good friend of mine just before. He's a founder of a large DeFi protocol, and he has to be like, I ask myself, like, what am I doing here? We were working with all those regulated players and banks, and none of them are here. Where are they? So, please, come to the technical conferences.
That's your wish, yeah.
Well,
it would help, yeah.
The question before was the magic one question. So it's like, I'd say to build on your point, Martin, if the central banks of all of these countries acknowledge that their local stablecoins as legal tender, then the banks would fall in, then the merchant processors would fall in, and then we'd get what would make my job a lot easier, which is that the entire local economy would be run on these stablecoins. And then if the settlement could just be on chain 24/7, we wouldn't have to deal with these legacy systems. And that would make, right now, like within FX markets, stablecoin markets, the service, we're already innovated. It's already better than these legacy systems, right? Generally speaking, the UI of all of these platforms, I'd say the majority of these, like whether they're Web 2.5 or fully Web 3 DeFi protocols, are better, generally speaking, than these old, banking apps and whatnot. But there still isn't the depth and liquidity in these like on-chain stablecoin FX markets that there is in TradFi, right? Like the depth on, these like, the FX desks are hundreds of millions of dollars, where we have like 1 to 5% of that on chain, and we're missing these big institutional participants with big money coming in. I like being, one of like the deepest liquidity players in the region, but like it's just me and I'm not that liquid, right? Like we're a startup, which is like we need, this big institutional money to kind of come in and really expand the sector. But if like all of my clients and my clients' clients and their clients and their consumers were paying with these on-chain, these local stablecoins, it would make everyone's life a lot easier too.
Yeah, my optimistic take there is that in Latin America, you have two things that happen regularly. You have regulatory capture, absolutely, that's a yes. And you also have regulatory, what I call it, spillovers, right? So in this case, USA, they did the Genius Act and so on. So Latin American players start to claim compliance to that, right? Even without a local regulation in place. And I think that's a good practice. And I think that's a practice that the consumer or the client should also demand, right? I think the industry is mature enough to claim compliance even without a local regulation in place. Obviously, you have cases like Mexico and Brazil that they have their own frameworks, and the regulatory capture there is, often. But I think we are in I'm optimistic in terms of the spillovers of that regulation coming from the USA.
Yeah, not surprised that all of our answers related to regulations. Interesting to see, the different economies take a few steps forward. Then, like even recently in the news, the UK instituting a limit of stable currencies for the individual person. Sometimes we take steps back as well. We have about 2 minutes left. I just want to give you guys like 20, 30 seconds each, knowing, who might be in the audience and the network that might be here. Who are you guys looking to partner with? What are some things that you guys might want to seek out at these sorts of conferences and partnerships you might be looking to make? Give you guys around 30 seconds each. We can start with Martin.
I have one very specific ask, actually, because I'm being asked by everyone that we should do that. If there's anyone from Aave here, please speak up or please stand up. I know that there's some interest in having a Swiss franc stablecoins, but we just haven't found the proper inroads to the team. We're here, we're liquid, we're ready to kind of set something cool up. But and I believe you might want to have the Swiss franc on Aave as well.
All right. Go for it.
Yeah, we are interested to meet like non-dollar USD and non-dollar stablecoin issuers, because we need to know what their need is basically and what they want to have on chain, what their plan are. That's likely basically what I'm here for too.
Yeah, for us, we're doing a lot of partnerships with non-dollar stablecoins and also local FX market makers in each country.
Yeah, our whole goal is to be the local infrastructure for anyone that wants to do a soft landing in Latin America, wallets, exchange, PSP, you name it. So again, institutional adoption and partnerships with banking partners and so on. But again, probably we'll have to start from the more risk tolerant to the least, right? So basically, that's the message. Avoid us that path and do the leapfrog and skip that, because this is the future and it's going to eventually happen.
Great. Sounds like some knowledge sharing and partnerships could even be happening on the stage. Well, that's about it for this panel. Thank you guys very much for listening, and thank you to our speakers for sharing your time with us. It was really exciting to hear how the different elements of the world are playing into this market.
Thank you.
Thank you very much.
Thanks.